Hello everyone, and welcome to the second video of a series of videos that myself and my colleague Zafir Nagdi are doing on basic accounting concepts. In this video, we're going to have a look at debits and credits, ADLIC, and journal entries. So let's jump right into it and have a look at debits and credits. In accounting, you have a debit side and a credit side. Your debit side is normally on your left-hand side, and your credit side would be on your right-hand side. Okay, so that's basically it in accounting. If for every debit entry, there must be a corresponding credit entry. You have a debit side and a credit side. For every debit entry, there must be a corresponding credit entry. For every credit entry, there must be a corresponding debit entry. That's looking at basic debits and credits. You just need to know this off by heart. So if you look at this, you can screenshot this information as well as the information we're going to do on ADLIC. You can paste it on your wall in your room and learn this off by heart. For every debit entry, there must be a corresponding credit. For every credit entry, there must be a corresponding debit. Let's jump over now to ADLIC and have a look at the information over here. So in this, we're going to have a look at three aspects or three elements that my colleague Zafir discussed: the assets, liabilities, and equity. We're going to have a look at assets and see which side does an asset increase on and which side does it decrease on. We're going to have a look at a liability and see which side does a liability increase on or decrease on. And we're going to have a look at equity and see where does an equity increase or decrease on. So if we look at an asset, assets increase on the debit side and decrease on the credit side. Liabilities, on the other hand, increase on the credit side, decrease on the debit side. Equity increases on the credit side and decreases on the debit side. I like to remember this with a small acronym that I've put. It's called ADLIC, A-E-D-L-I-E-C, and that's our heading over there. Assets, so what this stands for is assets and expenses increase on the debit side. Liabilities, income, equity increase on the credit side. So you can see the arrow pointing upwards, just to remind you that assets and expenses increase on the debit side. Liabilities, income, equity increase on the credit side. Obviously, the opposite applies. Assets and expenses decrease on the credit side. Liabilities, income, and expenses decrease on the debit side. So that's something you can remember. When you're doing an example, you can just write ADLIC next to it, and you can have a look at whether your assets are increasing or decreasing and take the information straight from there. Let's go on to our third point now, which is journal entries. Having a look at a simple journal entry, the first thing that I would like to ask myself is, how does a journal entry look like, or what is a journal entry? So I'm just going to give you a quick example here of a journal entry. We'll have a debit side. Remember, for every debit, there must be a corresponding credit. So let's debit equipment. And the amount is, for example, whatever it is, we put in an amount over there. And we'll have a corresponding credit side. On the credit side, we'll credit bank, and we'll have an amount over there. So that is how a journal entry looks like. You have a debit and a credit entry over there. Let's look at a simple example. You purchased an office building for 1 million rand cash. So what have you done? You've purchased an office building for 1 million rand cash. Let's break down this example and see what forms part of this. We've purchased a building. So the first thing we have is a building. What element does a building fall under? Is it an asset, a liability, or equity? So if you apply the definition, you will see that building falls under the definition of an asset. An asset is a resource owned or controlled by the business due to a past event from which future economic benefits are expected. And what is happening to our asset? Is it increasing or decreasing? It's increasing because we're purchasing the building, we have more of a building, we have a building now, so it's increasing our asset. If we go to our acronym, assets and expenses increase on the debit side. So we're going to debit our building. So let's put that into our journal entry. We'll say debit over there. The account is building because we purchased a building, and the amount would be million rand. Why on the debit side? Assets are increasing on the debit side. Okay, let's go on. Remember, for every debit entry, there must be a corresponding credit entry. So in this transaction, you purchased an office building for 1 million rand cash. The word cash is over there, which obviously means that you paid out of your bank account for this building. So what account is affected? It will be bank. What type of account, or where does the bank account fall under? What element does it fall under? It falls under an asset. If you apply the definition of an asset, it falls under the definition of an asset. And what is happening to our bank account? Is it increasing or decreasing? We paid 1 million rand cash for it, so therefore it is decreasing. Money is going out of our account, so our asset is decreasing. So if we look at our acronym, assets and expenses increase on the debit side, the opposite applies, assets and expenses decrease on the credit side. So I will credit my bank account. So if I go to the information over here, looking at my journal entry, I will say credit bank, and that will be 1 million rand as well. And then we'll have a journal narration. So after that, we'll just put a small journal narration at the bottom. It will say purchased building, purchased building for cash. And that's about it. So that's a simple example of taking a transaction and putting into a journal entry. I hope that was beneficial to you, and we hope to see you in our next video. Thank you.